Hey, Nick Fenton here with TickerTank.com. Just put on an earnings trade in BIDU. Wanted to share the trade and show you the reason behind it, etc. So first thing, I'm going to move this out to a 3-year chart, 3-year daily chart in BIDU. And what you can see here is basically pull out the trend line tool. Actually, probably could have just used the 2-year, but basically we've got this uptrend support line. And uptrend support recently broke, so we've got that 2-year uptrend. Let's go into a daily chart, zoom in a little bit. So you can see here's the uptrend support, and I'm going to switch to an oval tool. We broke uptrend, two-year uptrend support, which turns that back into resistance here, or turns it into resistance. And we had a push back to uptrend support turned resistance there. It faded back off of that. Now we're sitting right on that uptrend support turn resistance once again, so it's a really nice setup going into earnings, nice bearish setup. Couple that with the fact that we have some pretty significant resistance right at this 150 price point, and then we've got recent highs right at this 165.96 price point, and that got me to thinking of a nice strategy. I'm bearish here. Usually I don't do directional plays. Usually I go somewhat outside the money on the BIDU or on earnings-based trades, but in this case I did something a little bit more aggressive. Now, first thing you have to do here is we're looking at BIDU, and what I do to calculate the expected moves, I go to the closest expiring options thread, and I look at the closest to the money straddle. So we're closest. Currently, we're at 137.80 or 137.90 ask in BIDU. Closest to the money straddle would be the 140. So we click on that, we get 12.85. So 12.85 is the bid, or is the ask on the 140 straddle in BIDU. Now, if we switch it to a strangle, I do the nearest to the money strangle. In this case, we're right in between 135 and 140. So I look at the 135, 140. So 12.85, 10.70, add those two together, divide by 2, and you get around 11.60. So when you add 11.60 to the current price point here in BIDU, you get your upper expected move, and when you subtract it, you get your lower expected move. So our lower expected move is approximately, let me switch back to this chart here, lower expected move is just about 126.50. So we'll say, right around that, right in that area is the lower expected move. Upper expected move is just under 150. So we'll put it right here. I mentioned I was bearish, so I'm going to do an around, well, I already did, an around the money put spread, buying an around the money put spread, and then selling a call, a naked call to finance a portion. So let's look at the exact trade that I did. We'll look at it on a 1-share basis, just to keep things simple. So sold the November 165s. I used the Novembers because there just wasn't much premium in the AUK weeklies, and I just didn't want to mess with the November weeklies. I just went ahead and went out to November, just the regular options. Usually when I'm doing an earnings trade, I use the ones that are expiring soonest. But in this case, a more aggressive stance. I wanted to give myself a little more duration in the trade. So I sold the BIDU November 11, just the regular options, 165 calls naked at 137 per contract, and then bought the around the money put spread, and that is the 135, 140. So sold the 135 puts, bought the 140 puts, and filled at 225 on that. What that does is it creates this risk plot profile that you see here, where basically if you set the slices to break even, you see the break even here is 139.12 at or below 139.12. So here's this white dotted line here is your break even line basically. Anything above that is profit, anything below that is loss, and then down here we have the price of BIDU on the x-axis. So if you look at this chart here, you can see at or below 139.12 you start profiting. Max profit on this trade is $412 per contract that you do, or per spread that you do. On the flip side, if it goes against me, Anything above 139.12 is going to be a loss, but then losses are capped at 88 bucks per contract between 140 all the way up to 164.88. And first of all, what you can see here is the probability of success for being at break even or better on this trade is 55%, 55.5%. Probability of being at break even or worse is 45% roughly. If you switch that over here and say, okay, 164.88 is where my $88 losses, capped losses, defined risk ends, and it in turn becomes theoretically unlimited losses because I'm short that naked call. There's an 85% probability that I'm going to lose 88 bucks. No more than 88 bucks. Only a 15% probability that I'm going to get in this theoretically unlimited loss territory. So give myself plenty of probability of not losing more than 88 bucks in this trade. And basically what I did here was I bought a fairly aggressive around the money put spread and financed a portion of that by selling this well outside of the money call. And this call is also well outside of the expected move, which was around 148.60 or so. So, well outside both the expected move and, well outside of the money. And this pretty much puts you, it's a good situation. So my net debit on the trade is 88 bucks per spread, essentially. And, max gains 412 bucks per spread. I've got a break even that is in positive theta territory, so everything's good. It's a nice setup. Of course, it's very risky. It's not going to make or break my portfolio because I did it pretty small size. It's just one of those nice speculative earnings trades that I thought made a lot of sense from a technical perspective, and also made a lot of sense from a risk profile analysis perspective. So went for it and wanted to explain the reasoning behind the trade. Let's hope BIDU sees a little bit of downside pressure, or worst case, doesn't go above 164.88.